Hey, what's going on, everybody? Welcome to Bonafide Investing, where we talk all things high yield investing, options, investment ideas, and investment goals. If you're new to the channel, welcome. A little bit of background. I've taken about 20% of my net worth. I have built what I call an all-weather high yield portfolio. I've called Cash Flow Life here, that uses my own equity as well as a little bit of margin that seeks to pay my bills and maintain and pay down that margin over time. Please hit like and subscribe. Please help support the channel. The more support, the more videos I can make. Nothing here is investment advice, not now, not ever. So please do your own due diligence before making your own investment choices. Even though I was a financial advisor at one time, I'm not responsible for your wins. I'm not responsible for your losses. Before we dive in today, I said it before, I'll say it again. What this channel is for high yield investing, okay? Looking at ways to build a sustainable cash flow business, portfolio, pension, whatever you want to call it, to help you live free from 9 to 5, or just help you generate extra income for whatever it is that you might want to do. Okay. What this place is not, this is not a get rich quick scheme. This is not a place where performance is number one, right? Risk is the most important variable here, managing that risk. It's also not a place for angry, ignorant, emotional outbursts in the comment section, right? Still getting those few people who just say the most off-the-wall, ignorant, stupid things. And again, there's no place for it. What I've learned in my years is these are people that I really don't take seriously. Usually live in a mom and dad's basement in their 20s and 30s. Really nothing to offer, not doing much. So again, these are people I love to pray for. But this is not the channel for you to leave those types of comments. So just a reminder, for those of you longtime supporters, your comments always welcome. Thank you for your insight, what you're doing, your constructive criticism, and just really everything you've been doing there. So we're not even 3 months into this journey here on this channel, this Cash Flow Life. And I got to tell you, this has been far more fun and rewarding than I could ever imagine. And thank you guys. I feel really blessed through this whole process. So with that said, let's kind of dive in. I wanted to build on the video I made yesterday. I talked about really the topic of, can you live off of high yield forever? And I think you can. I think there are variables, there are some caveats and things I think investors should be mindful of before they kind of dive in and really take that journey. Okay. I've said it before, stay humble in any process you do. Do I think everybody should high yield invest? Absolutely not. As a matter of fact, I have more of my net worth in other investments and strategies than I do in Cash Flow Life, just to kind of keep it in perspective. Okay. So again, the only goal here is to generate high income, to pay my bills, right? And over time, hopefully maintain, possibly even grow Cash Flow Life as we go. Okay. Now, what were the three biggest things yesterday? Well, dollar cost averaging. You got a dollar cost average. Okay. You've got to be buying income, whether you do it daily, weekly, monthly, whatever. I think to sustain a high yield portfolio, you've got to dollar cost average back in, and you want to be mindful of your expenses. Using easy numbers, if you get $100,000 in bills annually, if you're generating $100,000 in high yield income that fluctuates, which it will, I would be dollar cost averaging back into margin, maybe putting more money into it to grow it is what I would be doing, to make sure that I'm offsetting inflation and being mindful of lifestyle creep, right? Not letting all the bells and whistles of new technologies and new toys kind of blind you to what you're really trying to accomplish, okay? So again, be mindful of that. Dollar cost averaging, I think, is huge. You've got to also hedge. And however you do it your own way. I use puts. I use calls on things. I use inverse funds. Okay. I hedge. I am always thinking of how much can I lose before how much can I make, especially in a high yield portfolio. Okay. So these people who keep saying, show us your dividends and performance and all this stuff, happy to show it. Robinhood doesn't account for distributions anyways. So the performance is silly. But what I do know is that right now, my distributions, you can go in and use basic math and common sense, and you can see the share count. You can just go in and see the weekly, monthly distributions, whatever that is. And annualize it yourself. I'm not going to pull that up on here because it reveals personal information that I don't want to reveal. As a father with children, I just choose not to reveal personal information. So again, anybody can calculate it. Every Saturday, I give an update during my portfolio updates here, how much we're making annualized, what the bills are, percentages, breakdowns, how I think Cash Flow Life's doing, in my opinion. And then I love to hear your comments, what you're doing, right? What you guys think might be better, might be worse. If you tell me there's red flags, tell me what those red flags are and how you would fix it, right? So again, that's where I think you guys can kind of break all that down as well. So again, hedging, dollar cost averaging, right? And I think you also have to use options, all right? You've got to use options in the sense that even a basic wheel strategy where you're selling puts, selling calls to generate income for the portfolio is a great way to generate income for a high yield portfolio. I did a lot of wheel strategies, selling puts, selling calls to up that cash flow. I think I've mentioned recently why I'm buying more calls and more puts lately. I'm at the high end of the margin I want to use right now. I'm using about 27.5% of my available margin. I don't like to use more than 30%. So what buying calls and puts allows me to do is leverage, right? Put in very little money to control far more shares, right? So it's a potentially higher reward for a lot lower risk on the buy side. You can control, you have the right, not the obligation to deliver in the contract, right? Whereas if you're on the sell side, remember you act as the insurer, so you are obligated to perform if needed. One of the main things, okay, as a high yield investor, I've been watching some videos really of late, especially in the high yield space. And I'm going to tell you, one of my biggest concerns is that I see a lot of strategies, suddenly people coming on saying they're changing their strategy, their portfolio. Then they're going on these long rants and raves of using words I don't think they oftentimes know what they mean. And again, it's highly concerning to see people who are all in Bitcoin or all in silver or all in Ulti or all at the same time in all three. And then when we have 50% corrections in some of these asset classes, they're nearly wiped out. So they're going back to the drawing board and scrambling, right? When really diversification, right, I think is key. Getting bonds exposure, getting equity exposure, getting precious metals exposure, real estate, right? High yield, inverse funds, puts and calls, right? Whatever that looks like to diversify, right? I think that's really going to give you the best probability of having a sustainable high yield portfolio. And again, you may not even have a high yield portfolio to live off of. You might be experimenting. You might be doing something where, I've got friends who are like, hey, I want to have some high yield exposure so I can pay for my annual vacations, whatever it is. And we talk about knowing your why. If you want that high probability to sustain that, again, the variables that we talked about that you need to control for, right, are crucial, right? I think staying completely long over time, just long only, is dangerous. I think we have a huge correction, if not crash looming, and volatility and corrections and crashes are part of the investment process. And a lot of people can't stomach it. And a lot of people, 40 and younger, have never been humbled by the markets, right? They've seen quantitative easing galore, right? Ever since 2008-09. And they think that that's the norm, the name of the game. I don't, right? I really don't. I was investing before any of that, right? And I'll tell you what, even though the writing was on the wall where things were headed, I've still always stayed hedged since those days, right? So again, be mindful of that. Be very careful of these people on these videos suddenly changing their strategies, changing their outlooks, their formulas, whatever they're doing. So I'll tell you what, guys, it's not investing. And you'll have a heck of a lot more fun going to Las Vegas and gambling and having fun that way than doing it inside a portfolio, right? So be careful. I mean, we haven't even had a market correction, and I see people getting margin called after a 2 or 3% down week, or crypto going from 125,000 to 60,000, right? And then, or silver going from 125 an ounce down to 72 an ounce. Be careful. People chase hype. People chase fads. And another thing I want you to think about this logically. If we did have even a 10% downturn, that's going to wipe out many of these supposed high yield investors, right? These channels. So again, if you can't adjust accordingly, if you can't make changes, admit when you're wrong, grow from it, I think you'll fail faster than you realize. I really do. I don't want anybody to fail. That's the last thing I want. I want success for everybody. But I'm also going to be real with my viewers. I'm going to be real with myself, anybody I talk with, that investing is not rocket science, but it's also not easy. And the not easy part is our emotions. Our emotions get the best of us, right? We've all messed up in that space. I told you guys before, I used to be an alchemist. I used to turn gold into lead when I started investing. I was horrible. And you got to grow, you got to learn, you got to get better. Otherwise, you'll eventually quit. And once you quit, I think you're grinding it out, right? And there's nothing wrong with that. I know a lot of people who love to work 9 to 5. They love their jobs, and I love that. But at the end of the day, I think you should have something that gives you optionality in your life, gives you choices, gives you the ability to say, you know what? If my boss who doesn't care about me let me go, do I have something to shelter me, to fall back on? And I see a lot of people getting laid off. I see a lot of people even losing their jobs who have high yield strategies who are at least getting a little bit of a cushion. It's cushioning that blow a little bit for them, right? So again, one of the biggest alarming things I see out there are some of these channels who are touting these changes and and my concern with that is that every time they go into the next thing that they think is doing well now, and that thing starts faltering, then they're going back, and it's this endless revolving door, right? Where they're just running from what disappointed them and then running to what's doing well. And that's how you go broke really, really fast. That's how you go poor really fast. That's how you blow up your account quickly, okay? So again, this is something that if you truly want sustainable, high yield, and you want this thing to succeed, and I'm not saying cash flow life is the best way to do it. I sure as heck would not put all my net worth into this strategy. I wouldn't recommend anybody do that. But so far, so good, right? And will it fail in the future? I don't know. Nobody knows, right? But as long as I'm not getting greedy, I'm being mindful of the need over greed and knowing this is exactly what I'm building this for, and not being impatient and not chasing something for the sake of chasing. Sometimes doing nothing is the best strategy at times, just sitting still. I think you can give yourself a much higher chance of success, okay? So again, love to hear your thoughts around it. Again, the big three, I'll reiterate them again, is dollar cost average. Use options strategically and wisely with margin in your own capital, right? And then hedge, right? Be mindful of downside. That's really all I have today. Didn't want to preach, but again, be very careful of these videos out there. I'm not saying what these folks are doing is bad in any way, shape, or form, but what you'll notice is there's not a lot of conviction. They sell it as conviction, and it's a quick change. It's a quick, here's a new strategy, here's a new way of doing things. And I don't know, I'll tell you what, I'd be very careful. And a lot of times they've been good litmus tests for me, because when they get out of something or they start diversifying away from it, I like to kind of maybe start inching back into that, right? Usually the low is pretty close. And then when they start saying, here's where I want to go next, I start maybe wanting to, if I have a lot of exposure, cutting back. It's like the great aunt, right? Who asks you when they should buy gold. Usually gold is probably at a top at that point in time, right? So be mindful, guys. Love to hear your thoughts. Please hit like and subscribe, help support the channel. Remember to trust God, rely on the math and charts, and ignore the noise. Hope you guys have something from today, and have a great day.